What's going on, guys? It's Kyle. Welcome to the Stock Goat YouTube channel. In today's video, we're going to be covering the overall market, and we will also be discussing the Sofi stock. I'm sure there is thousands upon thousands of retail investors that are feeling a massive amount of pain in today's market. We're talking hundreds and hundreds of, high growth names are getting absolutely obliterated in this market. The reason why is because the market is anticipating interest rates rising in the near future. We will be going over in today's video why that is affecting technology stocks and how it can impact their profits, revenue, etc. And we will also be discussing why I believe SoFi is one of the best technology growth stocks to be buying right now, because they have a major catalyst of a bank charter license, and I'm going to show you how that bank charter can transform the company even in a higher interest rate rising environment with high inflation. Be sure to smash the like button. Let's try and get the video past 1,500 likes for the YouTube algorithm. Be sure to drop a comment. Are you buying SoFi stock this week or any other type of growth stocks? And be sure to subscribe to the channel. Let's try and get the channel past 10,000 subscribers. Let's get into the video. All right, guys, we can see I'm watching about 45 different growth stocks in the market, all different types of sectors. And the hardest hits right now is definitely Cloudflare, Affirm, C Limited, Bill.com, and Shopify. Okay, these are all getting hit over 10%. And all these companies right now, are basically losing money, high price to sales, or, a high PE, etc. Okay. Anything of those criterias are getting absolutely hammered. I told you guys for months and months and months to avoid Cloudflare and Affirm at all costs. I mean, these stocks are really getting hit. The price to sales was ridiculous at one point. Both of these companies were trading at 50 and 100 times sales. They've definitely pulled back dramatically, and I believe Affirm is now in the 25x range or something like that. So these have been feeling the pain. C Limited just got dumped by one of the China conglomerates, Tencent or whatever it's called. So they're selling a massive position. Bill.com was a higher valuation e-commerce play as well. So all these companies have a reason why they are pulling back dramatically. Okay, any institution holding these companies are dumping them because they are afraid of those high interest rates environment heading all these companies' way. And we can see there's other companies getting hit. Zscaler, Cloud, Matterport, price sales a little bit up. Snowflake, of course, I told you guys to avoid. Trade Desk, another Cloud. Open Door, Robinhood, Upstart, Block. The list just goes on, okay? SoFi right now is in the middle tier list of about -5% decline. And I'm going to be completely honest with you guys. I am actually surprised SoFi is not holding up a little bit stronger with that bank charter catalyst on the way, guys, of becoming a legit 100% online digital bank. Remember, guys, if we take a look at the companies that are flying today, take a look, guys. Charles Schwab, Morgan Stanley, Bank of America, JP Morgan Chase. All of these companies are up anywhere from 4 to 5%. The financials are flying, okay? That's what SoFi's entire goal is. They're trying to be the one-stop shop financial institution for, the millennial crowd. And that is why they're going after that bank charter license. They're going to have the exact same pricing power of all of these banks. They just need to get it done, right before interest rates get jumped, and go up. If they can get this charter done before that happens, which the interest rates could potentially be moving up in March or something like that. If they can get this done before that happens, this stock could absolutely fly the entire year, potentially pulling a triple, because the price to sales is going to be extremely low. Now that we are in 2022, we're trading right around 7 to 8 times sales right now. So we do have a low price to sales multiple, and we are heading towards that profitability extremely soon, potentially by the end of the year. This article gives us a perfect understanding of why interest rates rising affects, growth stocks. So take a look. We'll read this out and we'll summarize it real quick. When the Federal Reserve acts to increase the discount rate, it immediately elevates short-term borrowing costs for financial institutions. This has a ripple effect on virtually all other borrowing costs for companies and consumers and an economy. Because it costs financial institutions more to borrow money, these same financial institutions often increase the rates they charge their customers to borrow money. That's exactly why banks are going up. They're going to make more money with interest rates rising because they can increase their, interest rates as well. So individuals, consumers are impacted through increases to their credit card and mortgage interest rates, especially if these loans carry a variable interest rate. When the interest rate for credit cards and mortgages increase, the amount of money that consumers can spend decreases. Consumers still have to pay their bills. When those bills become more expensive, households are left with less disposable income. When consumers have less discretionary spending money, businesses' revenues and profits decrease. Guys, there you go. This is the summary. More pressure is on the consumer, higher costs, higher bills, and it's making them, spend less money, making these companies do less revenue. That's it. That's why growth stocks are pulling back. Growth stocks are not profitable. Growth stocks, have high debt. Growth stocks are going to have to spend more money to borrow more money. There you go. That is the summary of why growth stocks are falling and the banks are going up. They're all profitable. So as you can see, as rates rise, businesses are not only impacted by higher borrowing costs, but they are also exposed to the adverse effects of flagging consumers' demand. Both of these factors can weigh on earnings and stock prices. Boom. This is why, growth stocks are falling. They're watching out for companies that don't have any, earnings, no PE ratios, no EPS, no nothing. That is why you see those specific stocks getting absolutely hammered. Once again, I am very surprised SoFi stock is not at the top of the list right now with all these growth stocks, anywhere in the -2 to -3 range. Of course, it's going to be a red stock because, this is a high retail interested, company, but I'm very surprised it is not a teeny bit higher, anywhere in the PayPal to charge point range of, 2 to 3%. I'm very surprised. So more weak hands are exiting the company. We have a bank charter license on the way. This is oversold in my opinion. They're heading towards profitability much faster than a company like Affirm that could take 3 to 4 years. We could get it done in literally 1 year. This is an article expressing why the bank charter is going to have such a dramatic impact on SoFi across the board. It's going to increase lending capabilities. Banks operate by using deposits to offer loans. As lending is the primary source of revenue, the company will be able to expand its lending capabilities. Guys, there's no telling how much money SoFi has in deposits right now. It could be anywhere from 5, 10 to 20 billion dollars. I mean, they have literally 3 million plus customers. Their increased lending capabilities are going to go through the roof if they can get that bank charter license, allowing them to use their deposits. No relying on third-party banks. By being a bank, SoFi won't have to rely on third-party banks to provide the capital, driving operation costs down. This is going to get them more profitable much faster. They're going to lower their costs, lower their expenses, improve marketing and pricing control. You want to have pricing control in a higher interest rate, higher inflation rising environment. While obtaining a national bank charter gives credibility to the company, newfound pricing control will allow them to go after a larger market share. While already competitive in their prices, lower costs will let a very flexible approach from higher EBITDA that will fuel the further growth to more competitive pricing that will capture a more significant market share. So guys, SoFi has to get this done, guys, before these interest rates continue to rise and go higher and higher throughout the year. They need to get it done. Management needs to seal the deal. We know that there is a lawsuit going through. We know that the OCC has not, approved it on their website. We know that there's a lot of things happening, in Congress, a lot of things happening at the FDIC level. There's just a lot of things that are out of the control of SoFi. But the good thing is SoFi has extremely strong leadership that is here to get it done. They are buying the dip nonstop, month after month. I believe this bank charter license is going to get complete, hopefully at the beginning of 2022. I do not see this going out to the back end of 2022. There would be no reason for that, and they need to market their product at the Super Bowl as a bank. This is going to be massive growth for new users getting added to the platform. So once again, guys, SoFi is holding up, top 16 growth stock in losses right now. That's not that good, but it is much better than, C Limited, Cloudflare, Affirm, Bill.com right now getting hit anywhere from 10 to 12%. I mean, this cannot last, these types of dips, guys. I mean, all of these companies would completely be vanished in 10 days, okay? The stocks will go to zero in less than 10 days. These are massively oversold. Some of these have been selling off for 1 to 2 months, nonstop, falling knife. This market has priced in, this interest rate rising environment dramatically. It is time for investors to really buy the dips on these growth stocks because these are going to be some massive returns in the next 1 to 2 years. I really believe if SoFi gets that bank charter license, they could have the largest returns out of all 45 of these growth stocks because none of these stocks are becoming a bank, and the banking financial institution stocks are the biggest winners today. That just shows you we are headed for success. You got to be patient, and remember, this management team is for real. If you made it to the end of the video, I want to say I really do appreciate it. I enjoyed doing this video for you. The market is absolutely getting hammered. We know that. You got to be very, very crisp, precise on your stock picks this year, guys. You have to be picking the highest quality of growth stocks. A lot of these have high price to sales multiples. Virtually all of these companies are losing money. Who can, turn a net income the fastest? Who can get profitable the quickest? I believe SoFi is at the top of that list with a strong management and strong leadership looking to solidify that bank charter license. This is the perfect time to get it done while other financial institutions are absolutely soaring, heading into these interest rates rising. Once again, my name is Kyle. Hope you have a great day.